In this video, we're going to talk about the commodity supercycle, and we're going to talk about how it's going to be exacerbated in the coming months. Before we do that, don't forget to hit the subscribe button and press the bell icon. I'm Sage for Kalkine Media. A commodity supercycle is defined as a long-term sinusoidal movement in the price of a commodity that produces a dramatic up and down trend that can last for a decade or even more. Commodity prices are subject to the laws of supply and demand in the market. Factors such as overproduction, war, COVID-19 restrictions and weather conditions can affect supply and demand for these goods and cause price changes in the short run. However, the long-term supercycle patterns are not affected greatly. Commodity prices go through periods of long-term price movements that are well above or below their long-term price patterns, and these movements are called upswing or downswings. The increase in commodity prices is strongly supported by industrialisation and urbanisation. Commodity prices rise as they receive strong demand amid slow-moving supply. On the other hand, the supercycle enters a downward phase when supply in the market is sufficient and demand decreases. Was the year 2021 the beginning of the supercycle? In 2021, commodities soared to their peak level since 2013. Collective pledges, including a net zero emission target by 2050 and a government stimulus package, combined to boost commodity gains. Copper prices hit more than $9,000 per tonne on February 23rd, 2021, a 9-year high. Crude oil hit a 1-year high, and the price of coffee and sugar also rose. Since people travelled less for the price of the pandemic, gas and oil demand fell drastically in 2020. Later on, the demand grew in 2021, and this added a rise in crude and gasoline prices over the course of the full year. As sanctions on Russia's exports of crude oil and petroleum goods lowered the global availability of oil products such as gas, petrol and diesel. Tighter global crude oil supplies and restrictions on refiner capacities have also lowered the gas and oil availability, which has resulted in higher prices for the oil in 2022. And meanwhile, gold prices, they've been declining since mid-April, mainly due to higher interest rates and a robust US dollar. In addition to inflation well above target, the US Federal Reserve increased interest rates by a total of 2.25% from March through to July. The US dollar also appreciated compared to most countries, with the dollar index rising to its peak level in 2 decades. And as a result, investment demand weakened with net outflows in the gold-financed exchange-traded funds, or ETFs for short. This was for the second quarter of 2022. Weak jewellery demand, particularly in China, due to the restrictions, as well as weak demand for consumer and electronics, also counted on gold prices. And with that, we've reached the end of the video. Thanks so much for joining us. Now share your thoughts in the comments below. We'd love to hear what's been going on in your part of the world. And like the video, hit subscribe and press the bell icon to be notified every time there's a new video. I'm Sage for Kalkine Media.